Under the Bretton Woods Agreement, these 44 countries agreed to peg their currencies to the US dollar, which was in turn pegged to gold. This arrangement meant that 1 ounce of gold was worth $35, or 28.35 grams of gold equaled $35. The US promised to redeem dollars for gold, effectively backing the dollar with gold. This gave countries confidence in holding US dollars, knowing they could exchange them for gold. So, why did these countries agree to the Bretton Woods Agreement? The main benefit was stability. By pegging their currencies to the US dollar, countries gained a reliable exchange rate system, which facilitated international trade and investment. Additionally, backing the dollar with gold provided a sense of security, as gold was universally recognized as a valuable and stable asset. This system helped the US dollar become the dominant global currency, underpinning international financial stability for decades. The Bretton Woods Agreement laid the foundation for the modern global economy, with the US at its center. The Saudis were not wealthy in the early 1940s because their oil production was just beginning. During World War II, Italy bombed Saudi Arabia, targeting American oil facilities, which hampered the Saudis' ability to produce oil at full capacity. In desperate need of protection, Saudi Arabia sought help from the United States. In 1945, US President Franklin Roosevelt recognized the immense global importance of oil for the coming decades. He held a crucial meeting with the King of Saudi Arabia, resulting in a pivotal deal. The United States agreed to protect Saudi Arabia from future attacks and supply them with military equipment. In return, the Saudi king agreed to sell oil primarily in US dollars. This deal significantly boosted the rise of the Middle East and cemented the US dollar's role as the dominant global currency. By the 1960s, when oil-producing countries formed OPEC, all member nations started selling oil in dollars. However, recent geopolitical events and economic practices have led to a gradual decline in confidence in the US dollar. During the Russia-Ukraine war, the US froze $300 billion of Russian assets and $7 billion of Afghan assets after the Taliban took over. This move alarmed countries like China, which feared similar actions against their $797 billion in US Treasury bonds. As a result, China and other countries started buying large amounts of gold as a hedge against the potential devaluation of their dollar reserves. The US's frequent money printing has also contributed to the declining confidence in the dollar. For example, the US printed nearly $1 trillion during the 2008 recession, $4 trillion in 2020, and about $2 trillion in 2021. This excessive money printing leads to global inflation and reduces the value of the US dollar. Consequently, countries with significant dollar reserves, like China, see their reserves value diminish. Gold, being a finite and non-printable resource, retains its value, making it an attractive option for countries looking to preserve their wealth. The limited availability of gold, enough to fit in a 23-meter cube, ensures its value remains stable.